Okay, today's video is gonna consist of one pair only, and we're gonna track the Australian Japanese yen. For now, I am looking for a buy. The main reason for that is that we have broken out of our level of a strong resistance, which is inside bar. That's one confluence, we close above. That's a confirmation of closure. Also, we have another price. This green, this red and green give us a strong level of resistance, which also was broken. So we have two confluences now to go long in this pair. So this is what we're gonna do. I'm gonna leave that black line right there, and it's gonna be our key level. So since we have a sense of direction, there's two ways to identify target. One, the candle that close above level resistance and choose 500. Even numbers, not so even, but you get the point. We don't need this anymore. Now that we have a target, let's see if this one match point A to point B. That's good. And a double top. Now I'm gonna drop to the daily. On the daily, you know for a fact this is a weekly key level. So how can we take advantage of this trade? Possibly that we have support resistance that turned support at this level here was respected once, twice, and 3 times, right? Sorry. Okay, and also I'm using the MACD. The MACD is telling me that it's bullish as well. So with that being said, we have a sense of direction, and we also have a target from here to here. Okay. Okay, now on the daily, let's identify what's happening first. Structure-wise, we got the high, we have a low, we have a high, we have a low, we have a high, and then we have a low, and now we have a high, and then it's creating a new low. How far it's gonna go? Not too sure, but if it does come back all the way, if you connect the dots, right? From this point to this point, grab as many candles as possible, right? We probably have a sense that the market may come all the way to this level, but if it does, most likely it's gonna break since we are on a daily bearish structure. So what could it be the best way to approach this trade? Simple. We got to identify that the daily, we have what is called a consolidation range that the market just broke, right? We don't need that anymore. Now we do have a range. You know, the market is trying to get out of the range by closing above, and then it's closing below. So meaning that the market has failed to continue to the upside. But what are the odds that this is a fake out? Right? What's the odds of that actually happening? So I don't see it, based on what I'm seeing right now, that this is a fake out. This is a true breakout, it seems, right? So I have a rule for trend lines, point A to point V. If we have a candle closure above 61.8 and below the 78, we have a trend line, a good trend line. So I'm gonna grab the high to the low, right? So there's a possibility that we still may reach this level, which is gonna give you a nice price for us to enter and to go long. But we already have one rejections and multiple rejections here. So how can we position ourselves in a way that we can get the best entry as possible and less risky? So, of course, this is a wave 1, 2, 3, and the market create a 4-way. Right? Is it going to continue to the upside, or it's going to melt like a head and shoulder and then continue to the upside? I don't know yet. It hasn't told me anything so far that may indicate that. We clearly see that we have a strong push to the downside. Now, let's identify the momentum on the H4 time frame. H4 time frame, we have a structure forming. Right? We have a low that the market respected. You see double bottom with a strong bullish candle. And look at this, we have a pattern within a pattern. Boom, and formation and W formation here. So these are the odds. We know that this is going to be our double bottom of the H4 time frame, which got respected already. Now we do have a wave happening, right? It's gonna shoot up from here. Let's count the waves first. We have 1 wave, 2 wave, 3 waves, 4 wave, and the 5th wave. I wouldn't be surprised if it comes back and creates a double bottom before continuing to the upside, since the 5-wave has been completed. Right? So now you may be asking, so how do we position ourselves to take this trade, right? Because at the end of the day, we had to go to our accounts and open up positions and risk a percentage or the amount of money that you want to risk at the end of the day. So let's keep it like really simple, right? So we have from point A to point B. We have that the market is resting at 61.8. I'm gonna grab that price with 92.0050, and I'm gonna use a key number, which is going to be a corner. All right. Now that we have a key number, let's validate this number. Let's see. So we have a strong level of supply and demand here, which is gonna give us a price of 71, and you know the drill. 1.8, 1.8. So 1.8. Okay, it is the same price. So we don't need to have 2 lines. So we have 2 confluences that this price is measure price. Now, how can we enter? Right? We can either wait for a closure above, or let the market come back to a level of demand, which is this level here. Right? That's how I lower the demand. Since it's bearish, I can do Fibonacci's from point A to point B. All right. It hasn't closed yet, but the idea is there. So if we go from this level, the double bottom, that's 260. I'm gonna do 500. Bye. Oh wow, what a coincidence, huh? So look at this. Supply and demand plus lower high. I'm gonna run that number by, so we got the same number. So So now we have two levels where the market may bounce from, right? So this is where we're gonna make our decision. The market may bounce from point A to point B. So what I'm gonna do, I'm gonna let the market come back to here, this price. Oh, copy and paste price. Copy and paste the price. Right? So we're gonna let the market come to this price. If it closes above, it's red, and then the next one is green, I'm gonna buy immediately. That's the whole idea of it. So what I'm expecting here to happen is just kind of stick confirmation, right? Because I need to identify if the market actually is going to respect 91.50 or actually is going to come back to this area and potentially break this level. So I don't want to buy right now because I'll be buying a little bit too high, because if I buy right now, right there, as that candle closes, right, I'm gonna have to put my stop loss, let's say, below this level, which is gonna give me 62 pips, which my target's up there. I mean, the odds are right, but I want a clear confirmation that momentum has really shifted. So it's better for me to wait for the next three candles. You know, this one could be bearish, and the next one, if it's bullish, it's a clear buy. Right, but in the meantime, it's just better to wait, and this is the only pair that actually looks good. So we want to see a bounce and then a bounce, something like that. But for now, let's just stay calm and wait for the opportunity to be presented for our positions to enter. So we have specified the direction that we want to go. We have specified levels where we're looking for confirmations. We have specified that if those levels have failed, we're going to look and adjust to the new environment. But for now, we are looking for buys until we don't see a break below this level of support. I'm not going to be looking for sell. All these areas is buying area. Of course, this is the main indication that's going to let us know if we want to buy and sell. So in the meantime, we just got to hold tight and come back until we see more data that we can use. Bye for now.